Welcome to another week of the weekly Forex forecast. So in the fundamental aspect, we have a lot of fundamentals this week, a lot of news coming out of the US dollar, New Zealand dollar, Canadian dollar, and then the Australian dollar. So the first one we have on Monday is the Swiss franc CPI, which the previous is 0.7 and the forecast is 0.4. So they are predicting a slowdown in their CPI to control inflation. So on Monday too, we have the ISM manufacturing PMI out of the US dollar. We have the ISM manufacturing price too, and on Tuesday we have the cash rate, the interest rate statement coming out of the Australian dollar. And as we all know, Australian dollar has been on a decline since weeks ago, like let's say 4 to 5 weeks to more than that. Yeah, it's been on a decline. So let's see what will come out on the interest rate report. Even though they are predicting the previous is 3.6%, so they are predicting 25 basis point rate hike on the cash rate statement. So let's see how it goes. But if they now release as expected, just know that there will be more downside movement on AUD pairs. Yes, that is AUD, the pairs in which the AUD is base currency. Let's say use the USD, we'll see a more move to the downside if they release as forecast. But if they now go maybe, let's say from 25 basis points projection to, let's say they now go for 50 basis points, you'll see because we have alternative currency, alternative trade. Because this week, what will happen is this week we are looking for more movement to the downside on AUD pairs, more movement to the downside on USD pair, and we have some pairs to trade in that aspect. But if we now see a surprise rate hike on Australian dollar, let's say from 25 basis points their projection to 50 basis points, that is a surprise move, and markets hate anything that is surprise. So any stock news in the market, you will see it move massively. So if we now have 50 basis points, that's a stock move. So then we have alternative currency, that is AUD CAD. So we have AUD CAD to the upside. Then even though both the remaining currency that AUD is paired like the base currency, they will move to, but the one I'm suggesting that if we have a stronger AUD is AUD CAD to the upside. So on Wednesday we have the SND cash rate statement too. They themselves, they are planning on increasing their interest rate by 25 basis points. So let's see how it goes. If it's come out as expected, just know that we have more downside movements on SND. Yeah, that's how it used to be. Unless we have alternative, maybe they give an alternative report. Maybe after they release the interest rate, they now give speech which supports their currency. So on Thursday we have the Canadian dollar employment and the unemployment rate. So let's watch that too. And on Friday we have one of the biggest news in a month. So out of the US dollar, we have the unemployment rate, that is the non-farm payment and employment thing, that's NFP. So we have the NFP on Friday. So this week is a very busy week. As you can see, most of the news are high impact. Let's go to the technical aspect. Let's check the technical aspect. That's the technical aspect. So DXY, as you can see, we have a bearish monthly candle close right here. This is a bearish candle close, as you can particular area. So what is the next move on DXY on US dollar? I'm still favoring US dollar to the dive, that is weaker dollar, because what is happening around the world, we should use the fundamental aspect of the China, the Russia, and the Saudi. So they want to change from petrodollar to another currency. So petrodollar is the means by which they buy oil using petrol as means of payment. But right now, they want to sideline the dollar. So they want to be using another currency. But they have not come in conclusion the type of currency they are going to use. Maybe they are going to use gold, or maybe they are going to use yuan, or maybe they are going to use Kuwait. So it's up to them to tell us the currency they want to start using buying the petrol now, since they want to sideline the dollar. And if they do that, the US economy will be in shambles and the dollar will be very, very weak. And as you are seeing this in the chart, it's telling us that we are going to see a weaker dollar. But on the contrary, there is no way we won't see a retracement coming to play out on this currency. So the retracement now is that if you check this monthly time frame, technically we are at spot level right here, technically. So as you can see, this is a support level right here, this is a resistance, we have a rejection here also, then we have a rejection here which comes to test this particular resistance, and it rejects to the upside, coming down again to test it, it rejects. Then the monthly candle here closes bearish. So having said that, let's check the weekly time frame. So weekly time frame, you can see that we have a rejection at this particular area. So yeah, there's a support level here, and then it's come to this level, then reject at this particular level. We have a rejection at this particular level to this side. So what I want to look at here is let's go to daily time frame and see what is happening at that particular area. So putting this trend line, we have a rejection line already. There's a rejection at that trend line already here. So we have the first touch of the trend line here. You know, this place is a support level. We have a support level at this area, but we have the first touch of the trend line here, the second one, and the third one. As you can see, we have a rejection at this area, which make the daily candle closes bullish on Friday. So anything lower than this, even for weaker dollar straight, like if we have a breakout of this particular area, then we should see US dollar first move to 99128 before the further decline in that currency. But for now, this week, as we know that after a move we have a retracement move, so we should see a retracement move. There are two things: is either it is a retracement move or a reversal move. Hope you understand. But here it looks like a reversal move, but if you check the monthly candle close, it closes bearish, so we might see what we call, let's go back to the monthly time frame. So we might just see a retracement if we use the Fibonacci retracement. So if it's move, then we'll profit from the retracement. Yeah. So the retracement, there are two levels we should look at. The 50%. Let me mark the level. The 50%. Let me use another color. Use yellow. The 61.8%. So let's use green. So get rid of it. So let's go back to the daily time frame, or let's use the 4-hour time frame to do the proper analysis. So what I'm looking at here is that it is very likely we'll see US dollar to the up, that a stronger dollar in the coming week. So it will actually serve as a retracement before we now see the continuation to the downside. So what we are looking at here exactly is back to the daily time frame. So we might see US dollar moving to this level before the further decline. Let's say this level first, because we have a bounce at this trend line, which serves as what, as a support level. And if we zoom further, you'll see that in the daily time frame too, we have a double bottom at that particular area. That is this and this. So we have double bottom. So it means that we might see a reversal at that level to this particular area. You might see a reversal at this level to this particular area, which is a 50% Fibonacci retracement in the monthly time frame before we see a further decline. And if you check that area, you see that we have some level of resistance line at that particular area, or 61.8 Fibonacci retracement level. So after this, anything can happen. After this, we might see a decline and we might see a break of that level. So let's see how it goes. But now what I'm looking at is, after we have a double bottom here, we have so many confirmation that shows that we might see a stronger dollar this week. The first one is the support level at the monthly time frame that I showed you before, the test of this particular trend line and rejection. Then in the daily time frame, the double bottom it forms at this particular area. Then using the Fibonacci retracement on the monthly candle close is another confirmation. So we might see it move to 103.918 or max of 104.407. So the first pair we want to look at is the Euro US dollar. So as you can see, we draw this trend line last week on Euro US dollar. So we have the inner trend line, this is the inner trend line, and then we have the outer trend line. So last week, we thought there's going to be a rejection at the inner trend line, and there is no rejection at the inner trend line. This is where we thought there would be a rejection last week, and then there is no rejection from that particular area. So, and we now saw the rejection at the outer trend line, which is this particular area right there. So we saw the rejection at the outer trend line, so which goes in line with the resistance of that particular trend line right there. As you can see, we have a rejection here. This is the inner trend line. Then we have it here and here. So if we zoom it further, you'll see that there is also a double top at that particular area, which, checking at the DSY, we have a double bottom. So this is getting into each other. You understand? So checking the DSY, you see the double bottom. Checking the Euro USD, you see the double top right there, which tells you that there is obviously going to be a reversal at this particular area. So let's check the 4-hour time frame for entry and the safe zone. So here we should see this double top playing out, and then if you see anything above this double top, then it means that the sell has been invalidated. Anything can happen in the market. So if you see what we call a breakout of this double top, which means that the sell has been invalidated, that's when you see the DSY breaking to the downside also. But for now, we are favoring Euro US dollar to the downside. So the safe zone should be at this particular area right here. Let's say we enter on Monday, we should see a retracement to this particular level, then we'll sell. So my bias on Euro USD is to the downside. Maybe we can see a retracement here, then the first take profit at this level right here. I think my take profit should be here. So the first take profit at that particular area, and then if we see a breakdown of that area, then we should see the second take profit at 1.05322. So my analysis on Euro USD is to the downside after I see a rejection at this particular resistance level, and in daily time frame there is a double top which tallies with that one on the SY. So the first take profit should be here, and then should be very careful of this area because there's a very strong particular area right there. So we have this level here, this level, this one. So we might have a move to this particular area. So if you take your profit at this particular area, just watch for a breakout before you say you want to leave it to go to 1 point, because we might actually see a reversal here to the upside. So after the GSY has done with its reversal, so from here this is only like 150. The safe zone should not be more than, let's say from here to here, should not be more than 50 pips. That is the safe zone, that is the stop loss. So from here to here it should be like let's say 150 or 120 pips. So that is what I'm looking at on Euro USD. So I'm looking to sell to 0.07402. That's what I'm looking at. So this is the safe zone right there. And if you see a reversal to this particular area, then you can see the selling pressure coming in here. Then we should have the take profit at this particular area. So if you now see the breakout, then second take profit at that particular area. So the next one I want to take is GBP USD. So this is what I'm looking on GBP USD too. If you go to the daily time frame, you see what we call the triple top. So I think you are familiar with triple top, that is when we have a rejection 3 times at a support level or at a resistance level. So this is the first rejection, this is the second rejection, and then obviously the third rejection. So here too we are favoring to the downside, but before you say you want to sell, I should wait for some confirmation before you enter. So at this particular area, we are going to use a chart pattern at this particular area. So obviously we are seeing a breakout of that triangle right there. So let's take it from there. So if you see the breakout of this particular triangle right there, that's which you see a move to the downside. So obviously this is the safe zone at this particular area. So let's review the safe zone here. This is the safe zone at this area. So if we see a move above this level, then for the move below this particular level, before we can say we want to enter sell. So that is a move below this level. That if you see a move below this level, then we should know that okay, we see a steady pressure from here, then our take profit should be at this particular area right there. Even though the in the higher time frame, this is where it will go. To be on the safer side, our take profit should be at 1.20231. That is almost like 210 pips stop loss. So that's what you're looking at. So just wait for it to break out properly at that particular level. If you see something above this particular rectangle level, just wait for it to fall below this level, then you sell, put your stop loss above that particular. But there are some scenario we'll see something like this, then just know that if you have the price below this level, you should go for short at that particular area, as we saw it on DSY, and then we see something like that on, we see double top on DSY, double bottom on DSY, double top on AUD and triple top on GBP USD. So all these are confirmation that tell us that you might have a move to the downside. That is, you might have a stronger dollar, and that stronger dollar might be a retracement before the proper continuation to the upside move, because we have US dollar weaker fundamentally, and then we have it stronger technically for now. But the most important thing is trade what you want, trade what you see. So that is the most important thing. You trade what you see. So the next one is AUD USD. So AUD USD, we are in a downtrend already. This is a very straightforward analysis. As you can see, we have a rejection at this point, multiple rejection, but this place is getting weaker as price is testing this place. If price is testing a particular support level, maybe 4th, 5th times, that place is getting weaker. So price is testing this place. Obviously you can see we have 1, 2, 3, 4, 5, 6. So if we now see a move to this side, and then we see a rejection maybe after the interest rate out of the Australian dollar, then we see a rejection from there, we might see a break to the upside at this particular level, because our price has tested that level various times. So what we are looking at here is to the downside on AUD US dollar. So this is where the safe zones are. So let's zoom this and see where we'll enter the trade. So if you zoom it properly, you'll see that we have a breakout of this triangular pattern already. Then we have a retest which forms a rejection candle at that particular retest level. So here you are hopefully shorting from this particular area. So this is the safe zone here and here. So we are shorting from this particular area and taking our profits at 0.6055. Anything above this is invalidated. Then that is when we'll be looking to go long. But for now, the whole bias is to the what? Is to the downside. So on US dollar, Canadian dollar, there's something we should look at here. If you check the monthly time frame of this, you will see that it's to the downside after it rejects from this level. So let's check the weekly time frame. The weekly time frame is bearish, is fully bearish. So if we see a stronger dollar, which means that obviously we might see a move to this particular, because this is the next level of support. Then maybe when the market's closed, you might see a move to this side, then a rejection to the upside to test the maybe 50% fib level of that weekly time frame. But let's see how it goes. We don't have much to say on US dollar, Canadian dollar, because this week we have a high impact news on both sides. We have so we might have, let's say, ranging markets. We might not have much movement on this, so we might just market might just be ranging till we find a break to the upside or a break to the downside. So let's see how it goes right there. But this is the next level of support. So we might have this weekly candle coming here and then move to the upside because of the stronger dollar projection we are seeing on a short term basis. So the stronger dollar might not last due to the fundamental aspects of the China and the Russia also trying to sideline the currency, and many people will put their money out of that particular currency. But if you use this trend line right there, we might see a move to this side. So the outer one, let's use the inner trend line at this particular area. So we might see a move to this side or this side before we see a move to the upside on the US dollar, Canadian dollar, or on the contrary, we might see a breakout to the downside. So let's see how it goes right there. So the next pair is SND US dollar. So let's check the weekly time frame. So on weekly time frame, if you zoom in further, you see that we have a reversal at this particular area. That is in the weekly time frame. So we have what we call a fake breakout at this area, and then there's a double top at that area. So we have the first top here and the second top here. So this serves as a neckline at this particular area. So we have the neckline here. So we have what we call first top, second top, then the breakout of that neckline, then obviously this is a retest. So we should see a move to the downside on ZND USD. So let's see how it goes right there. So let's check the weekly time frame. Let's check the daily time frame rather. So checking the daily time frame, you can see that we have a lot of reversal here, and then last 2 or 3 weeks we've been seeing SND USD in a range. So from this to this to breakout, then back to the range, just going back and forth. Then obviously we saw a rejection last week. So the last day of the trading week of last week, we saw a rejection at that particular. So checking the 4-hour time frame, if we zoom it further, then we can use the trend line to see where we'll be entering and then where we'll exit if it's not going in our favor. So right now we have our entry already. We might enter at the price level. So this is the level. Then our take profit target to be at this particular area. So it's target this area right there. So as our target, and the safe zone should be above this area, because as you can see we have level here, then we have rejection here too at that particular area. So this is where the safe zone are. So we might see a move to this side and then a reject to 0.62100. So anything can happen at that particular. So we might see a further decline, or we might see a bounce at that particular area. But this is what I'm looking at first as regards to the stronger dollar we saw on we saw that it's going to play out on DXY on a short-term basis. So don't forget that. So because the fundamental will play out in the long term, that's just the truth. The fundamental aspect will play out on the long term, but just trade what you see on the short-term basis. So this next we want to check is the SND, the US dollar, Japanese yen. So we have a breakout of this head and shoulder last week. So there's a breakout to this level. This level we have a level of resistance there. Then we have some range. Then we have a breakout. It still come back in. For now, I'm favoring to the upside on US dollar JPY, which in terms of taking profit at this particular area. So I'm favoring to the upside on US dollar JPY. So let's see how it goes right there. But if we see, because you have to be very, very conscious before you take that particular trade right there. You're going to take your long position at this area to wait above this level. You have to wait above this level back. Then if it closes above this level, maybe 4 hours rejection candle close above that level, then you can do what? You can buy to that particular level, even though you can see that there is a rejection candle forming here already, which is a doji candle, as you can see right there. So we have a doji candle formation on 4-hour time frame right here. So if you see a bullish candle, let's say 4-hour bullish candle, and it closes above this level, then we should buy at that level. So you see, yes, JPY to the upside, and this is the take profit level. But if we have a bearish candle close of the 4-hour candle, maybe 2 4-hour candle close, and it closes bearish, so you just know that the buy has been invalidated, and you can enter sell, and then this is where the take profit is if you are going to sell. That is 130.462. So the next pair I want to check is the Canadian dollar Japanese yen. So this Canadian dollar Japanese yen too, if you check the weekly time frame, this is in a very dangerous position. That is a very strong key resistance level. So if you see, we have a resistance here, a resistance level here. Let's say this is a fake breakout. It's not even a fake breakout. It went test this supply zone right there. So, and then we have what we call rejection. So it's going to test this particular supply zone right there. Then we have rejection. Then we are heading back to this level at this particular area. Then we have a weak rejection. That is a small weak rejection here, and then this large weak rejection. So going to the daily time frame, we saw it closes bearish. So there are two things you have to take note of this level on Canadian dollar JPY. Having it in mind that we have the Canadian unemployment rate, and then employment change on Thursday, and then we have some on Friday. So here we might not see much movement before the Thursday or before Wednesday. So what we are looking at right here is maybe a move to this particular area, then a decline from that particular area, because this area is a very strong key resistance area. So we might see a decline from this particular area, which the take profit should be at this particular area. So let's see how it goes there. But if we see a break to the upside, then the sell has been invalidated. So but right now my own bias is to the downside, because there is a level of resistance here. So but it has tested this level various times, so we might have a breakout of that level. So don't just watch out for what is going to happen at that particular level. So AUD Swiss franc is the next pair we want to check out, want to look at. So on AUD Swiss franc, we don't have much left on this particular pair. What I'm looking at is to the downside, because last week we took profit on this AUD Swiss franc too. So if you check the 4-hour time frame, you see that the energy fueling it to the downside is not much. As you can see, we are seeing a weak rejection, and the likes. So, but if you check the O bias is to the downside, at it did not close above this particular trend line right there. So this week we are still on the downside radar. So let's say we might have a retracement to this side. So any retracement to this side without breaking this particular trend line is an opportunity for you to look for a bearish setup to 0.60514. So that's what I have on AUD Swiss franc. So AUD Canadian dollar, as we said that if we see a stronger Australian dollar, so this is opportunity for us to do what? To buy AUD cards, because obviously this might actually be a fake breakout. So if we see a stronger dollar, stronger AUD, stronger Australian dollar, maybe after the interest rate report, so it's an opportunity for us to this is the alternate trade that we are going to take. That is our AUD card to the what? To the upside, because we have regular support level at this particular, and this might actually be a fake breakout to hit stop loss as usual, and then we might see AUD card to So let's see what is going to happen next week in the market. So the next pair we want to check before we conclude this weekly forex forecast is GBP Swiss franc. Here, what I'm looking at is to the downside. As you can see, the whole bias, if you see the whole directional bias, is to the downside, and if it's creating this, it creates something like this here too. So market is all about the price action, or technical is all about the repeating pattern, and then how you take advantage of it. So something like this happened here too. So at this particular area too, I'm favoring more movement to the downside on GBP Swiss franc, because they say history repeats itself. So here I'm shorting at this particular price level, then I'm taking my profit at this area. So this is where I'll be looking to short, and the safe zone is above this double top on the daily time frame. If you zoom it further, you see that there is a double top there. So checking the 1 hour time frame so that you can see it very well. As you can see, then this. So we might have a move to this particular area. So that's what I'm looking at on GBP Swiss franc. So the last one we want to check for the week, the last bias for the week is SND JPY. Checking on SND JPY, we can see that the bias is to the upside on SND JPY. So let's use daily candle close. Let's back to the weekly time frame. So this is weekly time frame. As you can see, we have a rejection at this area. As you can see, so after if the interest rate of the SND, the SND, if it comes out better than expected, we should see more move to the upside, maybe after a few rejection to this particular level. This is where I'll be looking to take my, this thing is now straight. So this is where I'll be looking to take my profit on. So let's see where we'll enter this particular trade, because we can't enter using the weekly time frame. Obviously, we are going to use 4 hour time frame or 1 hour time frame. So going to the 4 hour time frame, you can see that there is a rejection at this particular area. So using this trend line as a trap now, actually we might see a move to this particular area, then a rejection to the upside. So that's what I'm looking at on SND JPY. More move to the upside if we see the interest rate of the SND coming out better than expected, then we should look for our entry on this particular pair to the upside. So here I'm looking to take the long trade on SND JPY and go for 1 to 2 retracement, 1 to 2 ratio. So let's see how it goes right there. So this is the weekly forex forecast. If you are new to this channel, please click on like, subscribe, and let me see. You have to comment your opinion on individual pair, what you think will happen, and some pair that analyze it that don't go with your own analysis. So let's share idea in the comment section what you think about that pair, and then so that we can learn from each other. So this is just for educational purpose, not for not constitutes any financial advice. So do your own diligence, and then be safe, use your protective stop loss, and then have a good trading week.